Hello, guys, and welcome to your market report for Tuesday, August 14th, 2018. And listen, glad to have you guys here on the show. Trump is fighting for a weak dollar. The Federal Reserve is fighting for a strong dollar. For a while there, Trump had a few things helping him and stuff, and we've been having a little bit of weakness in the dollar. The dollar went, went down into the 80s, upper 80s or whatever, but now the dollar's riding high and riding strong. It's getting stronger. It's gaining strength. It's gaining momentum, and has everything to do with what the Federal Reserve is doing. This is the tightrope we've been walking between deflation and inflation. Deflationary forces are starting to win a little bit right now, and things are starting to shrink back. Commodity prices are starting to shrink back. We're looking at the emerging markets having trouble. Take a look at what happened just yesterday with Turkey. Well, not just yesterday, but it's been coming for a while. Now, there's a little bit of relief in Turkey today, but I don't think it's going to be long-lived. I think it's kind of short-lived. We're going to open the charts up and start to take a look right here. And the first place we're going to go with the charts today is we're going to get right in here with Deutsche Bank. We're going to take a look. Deutsche Bank's been creeping up on us. Nobody's watching it. It's falling again. If we take a look at a period of the last, let's go 5 days here, and we can see a fall. We'll go to 1 month, and we can see this fall starting to happen again. It peaked on Tuesday, July 31st at 11.19 euros. Since then, it's dropped off to 10.10 euros, which is quite a little drop, and it's still dropping as of today. So Deutsche Bank is sneaking up on us, or trying to sneak up on us. We're not going to go into cryptocurrencies first this morning. Cryptocurrencies are not doing that well right now. We're going to take a look at the silver price right now. First, we're going to start with that. And we're looking at $15.01 per ounce of silver. And it was actually down into the upper $14 range. Silver right now is a golden buying opportunity. If they take it too much lower than it is right now, honest to gosh, the miners are going to, production's actually going to start to slump. And this sort of thing with the production declines like that in the mining supply is something that wouldn't happen immediately. In other words, what would happen is if we get these lower prices, say silver were to slide down to $12, or even say it slid down to $8. Say it went down to $8, $8 stupid bucks. Well, you wouldn't see a decline in mining production immediately. And what would happen is you'd have to wait a few months. You'd actually have to wait about 6 months for the effect to happen for what happens right now in the price of silver, the spot price. So say tomorrow morning the spot price went down to $8. There'd be a 6-month lag in mining production. That would trickle down to the miners. And then what you'd see is because mining production right now is the only thing that's keeping silver from a shortage. Because, okay, there's tons of silver out there. But the silver available for sale is coming mostly from mining supply. So when you go out and you buy brand new silver, newly, freshly minted coins or whatever you're buying, those coins are being smelted down from 1,000-ounce bars, which is they use for the primary stock for everything. They use 1,000-ounce bars. So don't watch for silver shortages and say in the mints. For a shortage, say, of silver eagles or whatever. That's meaningless. What you actually need to look for is a shortage in the actual 1,000-ounce bars. And those 1,000-ounce bars are supplied from the mines. And so the lower they take the silver price, the more we're headed for an actual honest-to-God silver shortage. And the silver shortage will be in the 1,000-ounce bars that come from the mines. As the price moves upwards, if we do have a silver shortage, as the price moves upwards, rapidly moves upwards, the shortage will be stopped when the price hits a certain mark where silver comes in from the amount of silver that's kept in inventories. These huge amounts of silver kept in inventories around the world, but it's not for sale. But I shouldn't say it's not for sale. It is for sale for a price. We get up to that price, then pow. You know? Look at this stupid bug. A gnat. Anyway, we get up to that price point, then that silver would become available for sale and stop the shortage, because the shortage would come from the miners not being able to produce enough silver to meet demand. And the reason why the miners would not be able to produce enough silver to meet demand is because they've slumped off, because the prices fell down too low for them to actually make a profit margin. And so these guys that are manipulating the price of silver downwards, they know exactly how much it costs for mines to produce silver, and they're giving the miners just a tiny little amount of a profit margin. Well, that profit margin in the past, I don't know, in the past week or two, has diminished significantly. I would say their profit margin is probably diminished by maybe 30 or 40% or something, when the prices moved down from like 1650, where it was, down to 1501, where it is today. Their profit margin has dwindled enormously because they're working on a very tight profit margin. Anyway, let's move on and let's take a look at the Dow Jones Industrial Average today. She's down 100. Oh, well, let me just take a look here. That was at close. Okay, she's up 181, up 81.67 points. She's up 81.67 points. This rally has everything to do with Turkey, the Turkish currency coming back a little bit today, bouncing back a little bit today, but that's absolutely meaningless. Volumes are still very, very small today. Anyway, let's move on and take a look at crude oil. 68.32. That's where we're at. And we're up. Perhaps this is the biggest mover in the market today. It's up $1.12. It's up 1.67% today. So we got rising crude price today, and 68.32. So it's getting back up close to $70 again on crude. Let's take a look at bonds and rates today. Let's focus the chart in a little bit here and take a closer peek at these bonds and rates. We're looking at a mixed bag because the long bond is down just a little bit, where everything else is up. The short end of the yield curve is stayed flat. There's no move. She's unchanged. The biggest change is in the 5-year. No, wait. The 2-year. The 2-year has the biggest change of 0.13%. Next is the 5-year at 0.09%. Now let's take a look at the U.S. dollar index. Now see, this is what Trump does not want to see, is the dollar going up and getting stronger. This is deflationary. This is not inflationary. Inflation is going to cool very rapidly now because the Fed is starting to win. The Fed's withdrawing now $40 billion a month. They're going to increase it to $50 billion very soon of liquidity from the system every month, and the Fed is starting to win. The Fed's starting to win, and they're going to stimulate us into a crisis very shortly. This crisis is going to be a deflationary crisis, where prices on everything are going to fall. It's going to make it look like prices are in a bubble on everything right now. And prices are not in a bubble on everything. Prices are in a bubble on certain parts of the economy, like the housing market, and there's other parts of the economy where prices are in a bubble, but it's going to make it look like everything's in a bubble. Everything's going to fall, except for fiat. And it's the most ridiculous thing in the world, because fiat is in abundant supply and oversupplied fiat, but it's going to make fiat prices rise, and that's what we've seen. We've seen the prices rise, and we've seen it rise to 96. It could continue right on going higher as these prices rise on fiat. And it's absolutely ridiculous because this is going to crescend upwards until it creates a crisis situation. And then they're going to react to that crisis situation. And then they're going to send the fiat prices plummeting. And then the prices on everything else are going to take off. And they're going to get out of control. And this is what's going to stimulate us to a hyperinflation. This is all in our future. It's coming. It's out there in a few months into our future, or even maybe a year or something into our future, where we really get going on this. But as it progresses, it's going to be an enormously. It's a situation that's been building for a long time, and it almost happened back in 2008. But they had a lot of wiggle room back in 2008. They were able to lower interest rates. There's a lot of things that they were able to do. Inject money into the system without stimulating a hyperinflation, albeit they did stimulate inflation up. They did pick it up from what it was with their programs that they had. Anyway, let's move on and let's talk about cryptocurrency. Right now, we're going to take a look at Bitcoin, and here's the thing. Bitcoin went down, and it bounced off of support earlier. It went down to 58.80. She bounced off of support, and now she's bouncing back. She's up to 61.44. Now, yesterday I gave it a 60-40 split. I said 60% chance that she'd bounce off of support, and she would go up and higher and bounce back, and a 40% chance that she would go below support and go to a new level, new low. Today I'm going to increase the odds of her actually breaking through support. Even though she's going up right now as I speak, I'm going to increase the odds that it's going to actually go to the downside, to 50-50 right now. Which is pretty high odds of her going to the downside and breaking down below support. And the reason why I'm basing that on is what the altcoins are doing. The altcoins lost a lot in the last 24 hours. We're looking at some fantastic bargains in altcoins. That's if she doesn't break support and go lower, which would make it even bigger bargains in altcoins. Okay, so let's take a look at cryptocurrency market capitalizations. Like, what was it yesterday? 212 billion or something like that. Today it's 195 billion. So, I mean, we've lost like $20 billion worth of market capital in one day. Bitcoin dominance has increased to 54.1%, the highest I've seen it. And here we go. We got red numbers all the way across the board, and some of these red numbers are absolutely massive. 19% down on Cardano. Bitcoin Cash, 497 bucks, 14% down. Take a look at Litecoin, 52 bucks. It's down 13% on the day. Cardano's down 19%. Monero's down 14%. IOTA's down 20%. Tron's down 21%. Neo is down 19%. Now, I did an article on Neo on my other channel. Neo's down to $15.10. Neo might be one of your better investment coins because they pay dividends, Anyway, let's hope this bear market continues longer so that we can continue to buy in before cryptocurrency finally makes bottoms and then starts to move up the other side again, so we can have a little bit of a share in in what's coming up, Anyway, thank you guys for listening. Like and subscribe, and we'll catch you in the next episode on Wednesday. Bye-bye for now, guys.